Now, that jobs report that Vanessa's been talking about reveals this labour market, strength to strength. In some sectors, though, employees are feeling somewhat less confident. According to the company rating website Glassdoor, white-collar workers are growing particularly uneasy about their job prospects. It's due in part to the high-profile layoffs in tech and media sectors. On the other hand, the Treasury Secretary, Janet Yellen, said lower educated workers stand to see big opportunities.
People without a college education are finally going to be able to get good jobs in our economy in parts of the country that just have not seen a lot of job opportunities. And I'm afraid that too few Americans are aware.
So we might want to think of it as a two-track labour market emerging. It's a blue-collar versus a white-collar workers' diverging fortunes. And according to Glassdoor's, white-collar workers are seeing more layoffs and taking longer to get hired. The blue collars have got the job market is still competitive. Now watch this and you'll see how it goes. Here we have two trends. There's your blue collar, your good old-fashioned. That's one of those. And as you go down the track, according to these latest numbers, then the two of them during the pandemic very much even Stevens. But as they go further on, so the divergence begins, and the white collar has more difficulties and heads off, whilst the blue collar continues. Now, this doesn't necessarily always factor in AI, where the dynamic could be different again, arguably hitting the white collar more again as we move forward. Julia Pollak's with me, the chief economist at ZipRecruiter. I hope you appreciate my railways analogy, but the reality is that there is a sector of the labour force that needs to worry more than the others.
Well, if you look at the 6 tech-related sectors in this report, for which we got data through January today, 5 of 6 showed continued job losses. And that suggests that we haven't yet seen the bottom in tech. These tech layoffs are continuing, and they are fueling a lot of anxiety. Job seekers, in our most recent job seeker survey at ZipRecruiter, overestimated their chance of being laid off in the next 6 months 5-fold, if you look at the current pace of layoffs.
And as for the blue collar, the standard, the railway worker, the sanitation worker, yes, there could be layoffs as a result of tighter government spending, but that's a more solid, if you will, outlook.
So labor markets are still quite tight in most of those industries, but today's report should give us pause. The unemployment rate jumped to 3.9%. That's the highest rate in 2 years. And the increases were largest among the groups that are most vulnerable: younger workers, Black workers, Hispanic workers. So I think we are at risk of seeing this labor market cool too much. Some indicators that we got earlier in the week, like the JOLTS report, the Job Openings and Labor Turnover Survey, actually show that the hires rate and the quits rate are both lower than they were before the pandemic, even though job openings are still higher. There are several reasons to be a bit worried.
Right, but that's what whilst that is very unfortunate, if you happen to be looking for a job or in that situation, it is what the dirty secret is, that is exactly what the Fed and other central banks want. They want to cool down the labour market. They want to reduce the premium for workers so that they're not fighting and raising wages.
Right, so we are in a lucky position where there are still lots of strong tailwinds behind this economy. Workers are getting real wage increases again. Real wage growth returned in May of last year after 25 straight weeks of real wage declines. So that is buoyant consumer sentiment and spending. We're also seeing the stock market rally, which should ease financial conditions for businesses. So there are reasons to be very optimistic. I think much of the future is in the Fed's hands. There are
Right.
some economists who worry that they might wait too long to start cutting rates, and that these increases in the unemployment rate that we've seen lately could snowball. And that, of course, is the risk on the other side.
Where do you stand on this prospect of AI and its effect on jobs? Everything from the UN, the IMF, everybody has opined on the subject as to whether it's 5 million, 10 million, 100 million, whatever it might be globally, even more. But we've not yet seen it coming into force, have we?
So far, companies that are hiring AI talent are reducing hiring in other areas, but are not reducing headcount overall. We are seeing some evidence that the launch of ChatGPT did reduce demand for freelance workers. So it is possible that some jobs are already being displaced.
Right.
We just looked at job postings in a couple of creative fields, like for voiceover artists and for photo editors and videographers and illustrators. And there is some evidence that demand is declining, which could be related to the emergence of these new tools that allow you to do an enormous amount of creative work with very few people.
If you know that old line, if you had to choose a job, maybe for brother, sister, daughter, son, whatever, and you had to, remember like your father used to say, now you become a plumber and you'll never be out of work. There's always room for electricians, builders, whatever. What is the one job that will always be needed?
Well, I think your father is right. Still today, those jobs in the skilled trades are in very high demand, and they're not likely to be replaced anytime soon. Healthcare also is just seeing tremendous, steady, stable growth. It's also a sector that is recession-proof. We don't see job declines in healthcare during recessions typically, and so that's another area that's pretty prudent to go into.
You don't want me doing your plumbing, I promise you that. It really would not be a pleasant sight. Thank you very much. Good to see you. I'm grateful. Thank you.